Let's get back to some of the earnings. We're talking about Nigeria's earnings season is continuing as in other frontier Africa markets with big names such as telco giant MTN and Guinness posting positive results for the period ending March 2021. Let's chat to some of these headline earnings now, including the trading view of the new NGX Group Plc on NASD over-the-counter. My guest, Ayorinde Akinloye, Associate Investment Research at United Capital. Good evening, my friend. It's good to see you on the show.
Good evening, boss, and thank you for having me on the show today.
Thank you. Thank you. It's good to have you here on NASD Exchange. Give us your analyst view on MTN Nigeria's first quarter earnings vis-a-vis the same period of 2020 at the outbreak of the virus pandemic.
Okay, so quickly, for MTN, the numbers were, numbers they put out was, were very, very positive. We look at, for example, top line grew about 17.5%, bottom line grew about 42%. So the key thing is, first, for revenue, what were the key drivers? The key drivers for revenue basically, were growth in data revenue, fintech, and even voice revenue also. And if you recall, we had the ban on SIM registration last year, which led to, if you look at MTN subscriber numbers, you look at the fact that data subscribers and mobile subscribers also declined. So what we saw was increased data traffic amongst their consumers, amongst the existing active SIM subscribers, basically, and that sort of fed into stronger revenue growth during the quarter. Now, then you also drill down to their expense line. We discovered that there was some sort of contraction in net finance costs, basically, and that was because we saw some reduction in cost of borrowing. So cost of funds for MTN declined because it took, last year we had in the yield environment at record low levels. So we saw them try to refinance some of their existing debt obligations at lower interest rates, and that trickled down into lower net finance costs in Q1. And then lastly, their effective tax rate. If you look at the rate of growth in tax expense compared to profit before tax, there was a slower increase in taxation. So that was largely because they had lower effective tax rates on for the period, and that fed into very strong profit growth. So a 17% top line growth, but a 47% PAT growth. So those were the key highlights in terms of drivers. For us, the fact that revenue per user still grew significantly despite pressure from subscriber base, and then also the fact that they've been able to refinance some of their existing debt obligations at lower interest rates, and also the gain on taxation. So those are the key.
Yes, but here I'm looking at operating expenses climbing 19.2% for the first quarter of this year, despite the fact that things seem to have returned to normalcy, as it were, in terms of whether the pandemic here or so. Why do you think that was so?
Okay, yeah. So for MTN, they have a lot of USD costs that they incur. And, considering the fact that the Naira has been devalued significantly, and also the FX illiquidity that we've had over the past, say, 1 year now, that's fed into the surge that we saw in operating costs. So, if you look at direct network cost, for example, surged significantly year on year in Q1 2021. So it's basically the impact of devaluation on the USD cost that MTN typically incurs. So that was why we saw operating.
Do you think this trend will continue for the telco giant for the rest of the year, 2021?
Yes, definitely. The fundamentals for revenue growth still remains very strong. We expect fintech revenue to still continue to grow significantly, with a lot of work that has been done on extra time and, some of the key fintech avenues that they are creating. We also expect data revenue to still continue to grow. As we know, data penetration levels is still not at peak levels compared to what we have in other markets. So we expect data revenue will still continue to surge. And Also, we also highlight the fact that with MTN now being able to register new SIMs, that would definitely drive subscriber growth. So if they've been able to deliver a 17% growth in revenue, despite the fact that they were not able to add on more subscribers, then with the telco giants now being able to add on more subscribers to their base, that would definitely be supportive of revenue in the long run. So we definitely expect them to still be able to sustain the performance going forward. The only thing that could be a downside would be sustained weakness in the naira and the FX situation.
Okay, let's throw some Guinness into the conversation. Let's move from telco to brewer. Do you think Guinness Nigeria's 9 months numbers, revenue up nearly 20% and bottom line said about profit about 35%? That's good news from a loss position to a positive reading for this brewer. So, do you think do you think Guinness is turning the corner right now with these numbers for the better?
Yes, definitely. So briefly, just a bit of background before we saw the Q3 numbers, because they operate a different calendar. Before now, Guinness has been suffering a lot from the competitive landscape that we've seen in the brewery industry, with the entry or with the rebranding of international breweries, and then, the strategic attempts to sort of claim bigger market share. So Guinness had suffered significantly from that. And then they've also suffered significantly from the increase in excise duties and, inability to pass on some of these cost increases to their consumers. But finally, Guinness has been able to raise price about twice over the past year. So we saw that sort of feed into revenue. So the price increases that we saw fed into revenue. Also, last year, because of the COVID pandemic, there were lots of restrictions on social activities and typical parties that you have around, and basically social activities in general, as well as on-trade channels were also shut last year. But now, with restrictions being relaxed and eased, we've seen some of these activities resume or almost back to normality, and that drove volume growth during the quarter. Lastly, the Guinness Smooth products that was also launched last year has been received very positively in the market space, based on our market discussion with some of the key distributors. That has been received positively, and that has also helped contribute to the revenue growth. And another key thing to highlight is also the decline in total borrowings. If you look at Guinness books, there was about a 49% decline in total borrowings, and that has been a key problem for the brewer over the past few years, because the amounts they have had to incur on finance costs was always a major drag on profitability. So with that reduction in borrowings, and then also the lower interest rate environments that we had last year, which gave them the opportunity to sort of refinance some of their borrowings at lower interest costs. If you look at Q3 costs standing on finance costs, it was a decent decline. So all that supported profitability during the period.
And congratulations to see Guinness get a whole lot healthier. But let's wrap it up on the shares of NGX Plc. I was just to ask about when will profit booking hit the NGX Group Plc shares on NASD, and that happened today, about 1.3%. Do you think you folks, investors, can't wait?
Yes. So basically, we expected the rally that we saw in NGX. In the ticker, largely because demand for the ticker was huge, particularly even before the demutualization exercise and the official listing and all. So we saw the fact that demand was very huge, particularly from institutional investors. So it was expected that the first few trading days would see significant rally, just like we had with MTN when MTN also listed before. So that was the kind of rally we saw forward by strong demand. Going forward, we think that there will be some sort of the tickers, and we'll see some profit taking going forward.
Thank you so much, Ayorinde Akinloye, Associate Investment Research at United Capital. MTN listed today on Rwanda Stock Exchange. You need to wait for this.